Yo, 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 yo! Welcome back to the channel where we do not cut our hair. We're going to be looking at some dividend growth stocks today. And luckily for us, we already have a screener that is built. As you can see, I've got the different companies preloaded up here because FinViz can be a little chunky. So, if you don't already have this saved, go ahead and follow along here. Go to FinViz, go to Screener, and then I'm going to walk you through my thought process here. Okay, so what we're looking for now, as of today, this is the end of March. It's basically April by the time this video comes out. We're looking for stocks that provide over 2%. Quick ratio is over 1, meaning that they have enough cash to pay off any debts, notes, loans, IOUs, etc. The stock price is below the 20 and the 50 simple moving average. Essentially, the stock has ran up. The moving averages are based over time. So the stock is below the 20 and the 50. However, it's above the 200 SMA. Typically, if stocks can hang and stay above the 200 SMA while consolidating, finding a footing, and get ready to move up again, it's pretty healthy. Considering where we're at today, we've seen the market sell off considerably bad, and these companies are still doing very well. Gross margins are over 25%, meaning every $100 they spend, they're getting back $125 plus. And we have a low float here, so these companies can be kind of volatile. At the same time, the volatility can play in your favor because if the company is solid, like we're looking at here, they have good quick ratio, sales growth is positive over the last 5 years. If the company is doing well, the volatility up and down can help us prepare for the next move. So out of the 9,000 plus stocks in the stock market, we're down to 8 stocks here. Now, depending on your preference, my personal preference, I don't like to invest outside the USA. As we can see, there's 4 companies here that are outside the USA. Typically, China is no holds barred. Like, it's a no-no just because we've seen with Alibaba, the CEO of a company can literally go bye-bye for a little bit. So China is usually off limits for me. So I'm going to be excluding China here. Depending on your preference, you can just skip over in the description under the video for the chapters. But what is important to you and what's important to me is usually different. So we're going to look at, you can see this basic here. So I went ahead and clicked that. And what this is going to do is just give us a basic summary of the company. So we're going to look at, let's look at CAAP, for example. The dividend is over 2%. Fantastic. Price to earnings is 11.5. Immediately, we know that this is likely undervalued. They have over a $2.9 billion market cap. So if you're someone who does not want to invest in a penny stock or maybe a company that's not well established, this one looks like it might be a good one to review. So we're going to look at this one. And analysts have a recommendation at 1. Again, another over $1 billion market cap. Dividend is 2.5. Again, it's decently valued in the future. Right now, it's a little hot, but again, we'll look at this one. ITRN, almost at $1 billion market cap, not quite there yet. High paying dividend. That's going to be something we're going to look into and see if this is sustainable for the company. This is Ituran, location and control in Israel. Then we have a drug manufacturer, looks like for animals. Pretty overpriced at the moment. However, next year or maybe potentially 2025, it's looking to be cheap. We'll go ahead and look at the valuation of this. Dividend is 2.24, so that is good. We also want to keep in mind when we're going through these stocks, look where they've gone, 26 to 44, almost a 50% increase. We've got CSGS that went almost 100% increase. So a lot of these are still kind of hot and coming down, but the fact that they haven't broken down below the 200 SMA over the last few trading days, which has been very volatile, is generally good news. Snap-on, huge company. That is probably one of the biggest companies we'll look at today. Decently valued here. Good dividend, 2.64. Again, the stock in July was 260, then it got all the way up to over 360. Very low market cap company here, just opens door for a lot of volatility. And then we have this Chinese one, which I'm going to exclude. However, you can do whatever you like. Again, the data, price to earnings, we could probably calculate that overhand. Institutional data, insider, a lot of data is going to be missing because they file 10Qs outside the US, and oftentimes FinViz does not scan or have the ability to scan different formatted templates for 10Qs outside the US. So even with Israel, we'll see a lot of data points like earnings, EPS, like this stuff is not shown, but it's probably in the 10K for the companies when they file in their country. All right. First company we got here is, looks like an airport in Luxembourg. This company went from $1.87 to $20. Congrats, that is a 10x in less than 5 years. We missed the boat there. Just going down, it's still undervalued. This thing is growing like a monster, growing very well. Shares are remaining the same. The shares that are available to people like you and I is 29 million. That's crazy. However, there's 161 million shares outstanding. So think of your restricted stock units for employees. Think of your institutional shares, things like that, that is not directly available to people like you and I. I mean, this thing is hot. I would want to say we've got a cup and handle, left side of the cup, right side of the cup. If this thing can come down to 10, 14, that would be nice. But I mean, it's still undervalued. So this is a really good diversification play if you're looking to get into something outside the US. Again, it's held up really, really well over the last few weeks, and likely because it is not part or tied into our American economy so much. So it is a foreign airport. So don't really need to do much here. We can just go ahead and do some advanced charting really quick. CAAP. And basically what I've charted this one before. Wow. I regret not getting in. That's a shame. Okay, we're going to go from our lowest of low to our highest of high. So ideally, we would like to get in around 12. Have this come back down as our handle to 12 and then fly back up. So this one's great. If you've got time and diversification, it's still undervalued on paper. I mean, institutions own 14%. That is old data. Whoops. CAAP. So old data is showing that there is decent ownership. What is it again? 14%. I mean, given that it's undervalued in a price to earnings sense and it's highly recommended, analysts have a $22 price target. I'm going to say it's higher than 14.67%. That should be a no-brainer here. So 14.6 was old data. New data is 15. So clearly we're heading towards all-time highs, if not there already. So again, I don't really see this one being a horrible choice if you're looking to diversify. Again, it's very, very hot. Maybe wait till it gets down to 12. That's my take on CAAP. Good luck if you're going into this one. I like it as a diversification play. CSGS, we want to look at the bigger picture here. It is software infrastructure, trading at the same levels back in 2022. 2022, the stock was doing 1.09 bill. Right now it's 1.2 bill, so they've gotten better. EPS has gotten a lot better. Ooh, this is getting eaten up very, very nicely. Let's just go ahead and preload this. CSGS. This one's looking really good. Let's pull it back. Ooh, was it around during the dot-com? It was here during the dot-com bubble. Wow. If you bought this during the dot-com bubble and you held, you are at break even. What are you going to do? Are you going to exit at take even money? Wow. 25 years. What are you going to do if you've held that long? Do you keep holding? How long have they been paying the dividend? Let's find out. If you've held, okay. if you've had to hold on for 13 years before you started getting a dividend. So, it's it wants to break all-time highs. It's getting there. It's getting there. They're profitable. They pay a dividend. Institutions own 102%. I'm guessing they own more now, obviously. 142%. What? Wow. This is and it's holding up. It's holding up during all this market volatility. Let's just see what operates software as a service, engaging in providing business support solutions, communications industry focused on revenue management, digital monetization, blah, blah, blah. Wow. Director is cashing out. Good for you, buddy, at $66. Wow. So we're definitely at a decade-long top. What's going to be the best is to just wait on this one. Honestly, not because it's not a good opportunity. It's clearly a decent opportunity. Forward PE is nice. It's highly recommended. Analysts have it at 74. Huge appetite for big money and small money. Revenues increasing, EPS increasing. I mean, let's go back. Let's see. It got rejected here. Man, it is it just that's a bummer. I mean, it's not a bummer, but we've held this for gosh, so long. I can't really, I don't this one's tough. Let's extend this to the right. Probably a decent chance it comes down to 57. I mean, recently it's gone from 39 to 67, so you did very well in the last 8 months. In the last decade, you 5x'd your money. I don't really see major volume shifting here. However, big money is loading into this at preposterous levels. Wow, this thing is just on fire. Okay, I say we review this back in, not back. We'll take a look at this in March, April, May, June, July. Gosh, I don't even know because I don't even know if this is really a pattern here. Like, check this out. You got like a crazy triangle here. It's fallen out of an ascending wedge and it created a new ascending wedge. It's like a double ascending wedge. The first ascending wedge, let me just call it out here. First ascending wedge we've got right here. And here's our top of the ascending triangle, bottom of the ascending triangle. It stayed in, fell. It tried to break up, fell through, tested the top again, said goodbye, fell, and it fell again, creating the new ascending triangle right here. And now it's hitting resistance on the old bottom of the ascending triangle, which is now the top of this ascending triangle. Here's our new bottom of the ascending triangle. My words are not even coming out. So give this one some time. I'm torn on this one. I would say just hold on to this one for a while. Hold on. Hold your horses. Huge expansion there, and then just now it's kind of chunking sideways. I say we just put this one on the back burner, but check in on it in 6 months. Now we're looking at ITRN. We're at 15 minutes already. We might review this one and then just call it a video. Ooh, left side of the cup, right side of the cup. What's going on here? Scientific and technical instruments in Israel, 330 mil. This is really good here. Shares are being eaten up. They are profitable. They do pay a nice dividend. Look at that. That is beautiful here. This is worth its weight in gold. ITRN. Let's Google this. ITRN. ITRN. Yeah, that's ITRN. Okay, so 69% is new data. Old data was 56. So institutions are buying this, but what do they make? Engages in the provision of stolen vehicle recovery, fleet management, tracking services, operates through the telematic. That's pretty cool. It's founded in 1994. Let's go ahead and take a bigger look at this. Ooh, why didn't I buy this when I charted this? Okay. So here's our these. So we have I think these are Fibonacci arcs. Cycle. No, these are cycle brackets. So here would have been the bottom cycle to buy. Here would have been the bottom cycle to buy, and then 2030 is going to be the bottom cycle. Let's see. So I think this is a $36 stock. I think it comes down to 30. We're gonna want to see how it acts down here. I would love to see it get back to the purple channel, especially if we're gonna be going down into here. So we want to come back here, likely 2030. So you've had dip, rise, dip, rise, dip, rise, dip, rise, dip, rise, dip, rise. So you've had three. This is why I love charting. This is gonna take a second. Dip, rise, dip, rise. We're gonna make these purple. You'll pick up what I'm doing here in just a sec. Okay. Every cycle we've had a dip right at 3. Okay, now we're gonna do this. We've got our dip. We've got our rise. We've got our dip. And we've got our rise. Then we've got our dip. Gosh, it's so close. Okay. So, and then we'll make the rises are going to be purple. Rise, edit, channel 12. Channel 12 news. Okay, dip rise. Okay, dip rise, dip rise, dip rise. So every cycle we see of the dip rise, we get back down to here. You notice that? Do you notice that? Do you notice that? Do you notice that? So this is a great illustration in my opinion. We want to wait, and let's make this a little more accurate. Why don't we? Right there. Okay. Okay. We're gonna wait until this gets below $20. Call me crazy. Call me crazy. I dare you. Set alert. And we're going to do price below $20. And create alert. ITRN. Save. Don't take me to there. Close. Cool. Okay. All right. Great video. Great data we found here. It's going to sound crazy, but that 2032 period falls in line with our periods of panic. If you're aware or not aware, look it up. So, I also want to go and see how long they've been offering the dividend. So they've been offering the dividend since 2012. So after the great financial crisis. Did they offer it during COVID? They did not. So they took it off during the period of panic, the COVID period of panic. So we'll probably expect them to cut the dividend again once things get crazy. And then that's going to be our buy signal around $19. It's going to be around 19-ish dollars. In my opinion, then what we're going to see, folks. Again, this is part of me just being crazy like I am. Wow. Oh, this is just beyond. Come on, let's extend to the right, and we're going to make this a nice, beautiful green, and we're going to make it thick, nasty, so it's easy to see. Perfect. Okay. Yeah. It's crazy because the first great buy signal was 2009 and the sell signal was 2019. Then about a year later, the great buy signal, and then the sell signal was 4 years later. So we don't really have a time frame on what it's going to look like. But if we go from our bottom here to straight vertical, we're looking at a potential price target, in my opinion, of $56 at least, potentially. If this plays out, this is going to be a multi-year thing. So if this interests you, definitely feel free to give me a follow. We're going to wrap this one up, and we're going to make part 2 that's going to come out in a couple days. Thank you so much for watching, and I look forward to seeing you in my next video.